There's been a lot of volatility in the overall crypto market since we last spoke. So I wanted to take a minute to talk about what's going on with the overall market and also a very important announcement from Charles Hoskinson that just came out with regard to the overall state of Cardano, what's going on and where he sees it over the next couple of years. So that is very important. But before we get into that, if you enjoy this sort of content, let me know by liking the video, subscribing to the channel, and also commenting down below your favorite crypto project right now. Anyways, right now, overall crypto market is sitting at a $2.2 trillion market cap. We're seeing Bitcoin's price continue to hover right around $47,000 per coin, and we're seeing Ethereum hovering right around $4,000 per coin. Some of the big gainers over the last couple of days have been Luna, which is up 19% over the last 7 days. Avalanche, which is up 21% over the last 7 days. We're seeing Polygon up about 6% over the last 7 days. And there are a number of our favorite coins, some of our top picks in our private member community, which are up a good 5 to 15, 20%. But that being said, there are a couple of things we need to be aware of with the overall market, the state of the market. The first is going to be when comparing 2011 and 2013 cycle versus 2018 to now, which is the third cycle. When we look at this, there are so many similarities that are happening. The only difference is the timeline. So what we see is that in 2012, we accumulated around the 0.618 level before taking off. And TechDev explained on Twitter how in 2020, the same thing happened. It just took a little bit longer. Again, in 2013, in the first cycle, we saw a massive breakout at 1.618 level before the crash. And then again, 2021 rounded off at that. So basically what has happened with each of these Fibonacci levels in 2011 and 2013, that first cycle versus now, every single step of the way, we have mimicked the same price movements of that cycle. The only difference is this one is taking a little longer to play out. When in 2011 or 2013, it happened instantly, now it's taking a couple of weeks, 2, 3, 4 weeks. And we're seeing the exact same thing happen right now. So right now, we are just consolidating between the 1.472 level and the 1.618 level. This is exactly what happened back in 2011 and 2013 before we saw Bitcoin's price go on to rally from $145 per coin to well over $1,000 per coin. It nearly 10x. So we are still in the same place in terms of technicals, following all of the same patterns. The only difference is this time the cycle is taking a lot longer to play out, a lot longer for these price movements to happen than it did previously. And that makes sense. If you think about it, 2011, 2013, there was so much less capital in crypto. Now there's hundreds of billions of dollars in the crypto market. So it makes sense that these trends take a little bit longer to play out. Next thing with the overall market is we need to be aware of what's going on with Bitcoin and a couple of things with technical indicators. When we look at what's happening right now, this is the 200-day moving average. We're continuing to bounce right around that, and it's going to be important that we stay above this 200-day simple moving average moving forward. That really isn't too bad. The thing that we need to be concerned about, though, is that we are seeing a death cross just about to take place with the 20-day EMA and the 200-day EMA. We've mentioned this in a couple of previous videos, and we said that what we would like to see is Bitcoin's price break back above $49,800 per coin so we can see that we prevent this death cross from happening. But over the last couple of days, as we continue to trend downwards and really just consolidate trade sideways, it is looking very likely that this death cross is going to happen. While historically that is not a great sign, a couple of things we do need to keep in mind is that we have seen it happen a couple of times in the past, followed by a quick recovery. So normally these are like lagging indicators, just confirming trends that are already taking place. So just because we're about to break this line, the 20-day EMA breaking below the 200-day EMA, it's not the worst case scenario because we might just see a little bit more of an extended consolidation period before breaking back out like we saw in June and July of 2021. With regard to Cardano, though, a lot of people have been saying that they can't believe Cardano's price has been dropping as of recently. Why is it doing so much worse than all the other projects out there? They're losing faith in it, all these other things. And a couple of things we need to point out, which are things we've talked about so many times on the channel, is the first thing. Cardano's price, in terms of charts, in terms of technical indicators, really doesn't look that bad right now. What we're seeing is that Cardano is in the number 6 position, sitting at $1.25 per coin. But the key thing here is that we have formed a very strong support for Cardano at around that $1.18 per coin range. When we look at the chart, we can see that we formed a triple bottom, which we have pointed out in a couple of videos in the past. And the key thing here is that we're actually seeing this play out exactly as we had talked about in the previous videos. We'd explain how this triple bottom formed at that $1.18 per coin for Cardano, where we have bounced off of it 3 separate times. Right now, we're trading right around $1.25, but as soon as we see a breakout above this $1.41, we can expect another rally for Cardano up to about that $1.80 per coin range. The key thing, though, that I really want to talk about with Cardano today is going to be what's going on with Charles Hoskinson, because he recently came out in an AMA and he spoke a little bit about the future of Cardano, what's been going on, why the price has been dropping, and what he said basically is that the good news is that even though the price has dropped from all-time highs, from $3 to $1.20, the good news is that every single metric you can measure about the health of Cardano from January 1st, 2020 to what we're going to close out the end of the year at December 31st, 2021, every metric over the last 24 months has been absolutely exceptional, from the amount of ADA staked, to the amount of active users, to Catalyst participation, to the social signals, to account creation on Reddit, Telegram, Twitter followers, everything. He said the growth of the community and the utility of Cardano has grown tremendously if you just look at the data. He also goes on to explain how the DApp ecosystem that's formatting for Cardano, even venture capital investment, have all increased dramatically. He says there's not one single metric that hasn't shown a significant improvement over the last year and a half. So everyone is saying, Cardano is in trouble. Cardano, this network effect that people have been seeing is dying down. People are losing faith in it. But if you look at the numbers, you look at the data, while we may be seeing a longer consolidation period, while we may have seen the price drop as of recently, the bottom line is the numbers don't lie. We're seeing more active wallet addresses. We're seeing more followers on Twitter. We're seeing more DApps being built. We've seen smart contracts rolled out. So even if this is, going to continue to see a consolidation, long term, we have seen so much growth for Cardano, and that is what you're betting on. You're not betting on the next month, 2 months. For Cardano, it is a long-term play, 5-10-year play, where you can put your money in that project and know that they are going to continue to deliver, new partnerships in Africa, new partnerships around the world, and they're going to continue to deliver like they have already, because it's not like it's a 6-month thing. They're trying to accomplish something much bigger than that, and so this is an investment that even if it drops, the way Charles Hoskinson, the way that I look at it is that I've never sold a single coin. If you're looking to day trade, yes, there are ups and downs, but if you're looking at long-term numbers, well, there's been only positives for Cardano as of recently. Last thing with Cardano is going to be with Genius Yield. So Genius Yield, what they did is they raised $4.2 million in a seed round, and now they're launching their initial stake pool offering. They just did this, and even despite the market being down, despite all this negative news for Cardano, some negative sentiment, with their initial stake pool offering, more than 75 million ADA, worth $100 million, have already been delegated into the now 4 dedicated stake pools, which was a record number when it came to similar projects for Cardano. So this is a really big deal. Seeing how people are still very, very bullish on Cardano. All these new projects are coming out where people are pouring tens of millions of Cardano into them. This shows us that despite what anyone is saying about the project, we're continuing to see a lot of optimism around Cardano, and the community has not died down. It's only continued to get stronger. So anyways, right now, when we're looking at Cardano's price, there are a couple of very optimistic things. So we just have to wait and see what happens with the overall crypto market. But long term, I've never sold a single coin of Cardano. Even if I talk about some negatives sometimes, I just want to, inform you about the negatives, the positives, what's going on in the short term, but long term, I've never sold anything. So anyways, that's what's going on. Hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.